market's action this week has been defined by a move out of the stocks that had been working and into the stocks that hadn't. But our next guest thinks this move is really just about what's going on in the bond market and might not be the start of a long-term phenomenon here in markets. Matt Maley is the chief market strategist at Tabak, and he joins us now to discuss. So let's talk about this rotation. I think today we finally see the major averages going higher, but a lot of chatter the last couple sessions. Value is back. We're finally seeing the beaten down names picked up. What do you make of this action?
Well, these groups, as you mentioned, they've been beaten down and become quite cheap, but especially like groups like the bank stocks. So it's no surprise they're bouncing back. But I do think it's more of a reaction to what's going on in the bond market. And the thing is, the big pop in interest rates that we've seen in the bond market or in the treasury market has been due to an oversold condition that had built up a very big oversold. Was an overbought condition for bond prices and an oversold condition for bond yields. So, when you got this situation, you look at the yield on the 10-year note, it was the most oversold it had been since the late 1990s. And for the TLT, which measures price, the TLT Treasury ETF, it was the most overbought it had ever been. That's only been around since 2002, but still, these were technical extremes. So they're being worked off because of technical reasons, not because suddenly we're seeing this huge pickup in the economy. We have seen some numbers have been a little bit better than others. The employment number, though, was a little bit weaker than expected last week. So if we had seen a big surge in some of the employment data or some of the other indicators that you like to look at, like energy prices and other commodities, I'd be a lot more willing to say, yeah, geez, this is something that's going to last for a while. But when you get a sharp move that's really in reaction to an overbought condition in the bond market, it's hard to think, at least in my mind, that this rotation will be something that lasts for more than a couple of weeks. We're already 2 weeks into it.
So what is your view right now then on the economy and also just what the market is telling you about the economy, right? I think some folks pointed to the action in bonds, certainly through August and said bonds are saying we are entering recession. Can we kind of take that macro signal here, or is this, as you laid out, more about some of those technical factors, which several times now in the last couple of years have come up as major market movers and really sent sort of false macro signals to folks looking at price?
Well, the one thing is that, as we've noticed, for the last, a lot of people have talked about over the summers, the stock market has done nothing really for the last 20 months. And part of that, I think, has to do with the fact that the economy is slowing. It's still growing, so its rate of growth is slowing, I should say. And of course, we're seeing a big slowdown around in the global economy. So the problem, I think, is that too many people are too focused on, geez, are we headed for a recession or not? And my kind of feeling is that if the economy is slowing, and we're also seeing earnings growth is ground almost to a halt. Consensus growth for the full year is only 1.4%, and that's come way down as we move through the year. So it's kind of hard to justify a huge rally through the all-time highs after we've already rallied so much this year. And so I guess my point is, I think we're slowing, and it creates a headwind for the stock market overall, whether we're going into recession or not. So it's going to be really important to be in the right groups and in the right stocks, and that's why I think people need to be a little careful if they want to follow what's going on in this recent rotation.
We've just been talking about Facebook and the existential threat that regulation might pose to that company. I know it's something that you've been thinking of as we head into the meat of the 2020 presidential election. And healthcare traded a lot in 2016 based on who was ahead in the polls. Talk to me about your thinking about what's going to happen with big tech in terms of its reaction to what's happening in the 2020 campaign.
Right. I think this is going to be, I think, an important role, and I think very much like it was what it did to the healthcare stocks. Just as a reminder, what happened back in 2015, the summer of 2015, the year before the previous election, Hillary Clinton came out and talked about drug prices, and how they're way too high. And of course, everybody kind of jumped on the bandwagon on that because it's a bipartisan issue. Who's for higher drug prices? Nobody's for that. So this became a real problem for the group, even though nothing really came, no legislation came forward. And it was funny because even something that was Donald Trump was even in favor of. So the whole group got clobbered. Now we're running into a similar situation this time around, where it's a bipartisan issue. And it doesn't surprise me at all that that they're attacking these tech companies right now because we've gotten past Labor Day, we've gone past the Congress's recess and the summer vacation for congressmen and everybody else. And so now they're like, okay, the 2020 election is started. I need to be in. And again, it's a bipartisan issue. So this is something I think is going to be, they're going to have. I mean, it started last week with a senator from Washington saying that Zuckerberg might have to end up in jail. Seemed a little extreme to me, but now you have these attorneys general, which are going, making their big inroads there. And when the feds see that, they're like, hey, wait a minute, we don't want the states to take this issue away from us. So this whole thing can snowball. I do want to say, however, though, is I don't think it'll have the same kind of impact on the healthcare. The healthcare stocks, I mean, especially the biotechs, which are mostly impacted by drug stocks, they got clobbered down 40%. But they were up 80% the 12 months leading into that summer of 2015.
Yep. The
FANG stocks, especially the ones that are really probably going to be impacted by this, they've already kind of gone through a correction. They're actually down slightly over the last 12 months. So I think that's why I keep saying it's going to be create a headwind, not necessarily a downdraft in the group.
All right. Matt Maley is the Chief Market Strategist at Miller Tabak. Thanks so much for joining us. Talk to you soon.
Thank you very much. Have a great one.